Hey traders, Raghee here. I'm going to follow up on an idea that we first talked about way back on the 9th of December, and that was how can we trade crude oil but to the downside. And I thought, you know what, I should have so called this trade and this video idea oil slick, and that's exactly what we're going to talk about here today. Where is this oil slick heading to? What's the downside target? And what were the nuances of the setup? So if you haven't checked this video out, we posted it on December 9, and you can check it out over at the Simpler Trading YouTube channel. All right, let's head on over to how this chart looks now, and also in reference to where we were back on December 9. So December 9 is right there. Now, it doesn't look like much, does it? But I want to point out a few things. Double red JT multi, just a sea of red grab candles at that point. And we kept bumping into the wave. You can see that here, you can see that here. And then we have this Darvis resistance. Did it again. That's the bottom line of the wave. It's that red line right there. And by the way, if you don't have the wave or the grab candles on your chart, head on over to countdowntrader.com. You can download them for free for Thinkorswim, for TradeStation 10, and built right into the TradingView platform. If you search under Simpler, you'll find the Darvis 2.0 wave and grab indicators available for free. Okay, so you can see exactly what I'm seeing on your charts. So 3 different times we had an opportunity to short along the wave. Now notice it kept stopping at this 200, but my confidence for the 200 following through has to do a lot with the fact that we broke it before. This is not this impenetrable level, all right? And so what we have is a move lower from the wave right to the support of the volume weighted average price. And really, if you take a look at some of these previous lows back in here, closes, lows, I think we're still going to head down into that. That's a little too high. I think we're still going to head down into that area of support. I don't believe the sell-off is done, because this isn't just, oh, we're selling off because of the new variant. This is a downtrend that was just really looking for some kind of reason to head lower again. So let's just continue to take advantage of that. So there's your first target. Just simply look where candle bodies have stopped before. And then after that, I'm going to cue in on another level. The Darvis plus, right in here, we got this volume ledge. Little bit, you can see here, the volume's jutting out just a little bit. And with that little bit of volume jutting out like that, what you have is another layer of volume-derived support, okay, which is probably going to coincide pretty nicely with another volume tool. Take a look at how we've been able to break the mean of the V-score and get just below it. When our V-score reading is once again down in this area, we're going to definitely make sure that we respect that volume and scale out once again. I mean, now we can be in a break-even stop if we'd like, but I would really like to get to the point where we can see the second target and move to a trailing. And this is the whole scaling in, scaling out. This is the scaling out idea behind crude. So I really wanted to follow up on this idea because on the 9th, frankly, didn't look like much, right? And really, it didn't look like much on the 13th or even the 16th. But look at the structure. This is a double red, and that's where the probability for lower lows comes in. Think about probability, structure before strategy, and I'll see you all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.